Joining us now for a broader take on the market is Rebecca Walser, president of Walser Wealth Management. Rebecca, thank you so much for joining us.
Thanks for having me.
It's wonderful to see you this morning.
Great to be here.
Let's talk about a broad take that you've made before. You had made a call a few months ago saying the market would drop. 30% was your call.
Yeah.
Where do you stand with that? Do you see us, do you consider us right now? Because there have been questions of, we had basically flirted with the bear market. We got into a bear market and some sectors are certainly in that. Where do you see us within that time frame now?
Well, Diane, I think that we are absolutely still going to see further pullback, and we aren't going to get stability until the tariff policy is resolved. So right now we're on a 90-day pause, until July, basically from April 2nd. And there are a lot of 70 countries are negotiating actively with the White House, so we know we will be getting information that will come out. But once that pause ends, we're going to see volatility and implementation on that front. And then, of course, the biggest issue is the direct tit for tat trade war with China, and that has to get resolved. I mean, that is not something that is not non-resolvable. In other words, if we're going to keep moving this global trade as we've been doing for the last 20 years with China, it's got to get resolved.
So you're positive that piece will get resolved, because obviously that's the most difficult piece, because we got the 90-day pause. So that's, I guess gives clarity on timing.
I think like the last thing that Xi Jinping really made clear was he doesn't need to re-escalate beyond 125% retaliatory against what Trump did, because he said that is so pricing American goods outside of the realm of being bought that it doesn't matter. He could raise it to 2,000. It wouldn't matter. It'd be the same. So that won't work. We obviously have a much bigger. We buy a lot more from them than they buy from us.
Right.
But at the same time, this just can't work. We can't have the two largest economies of the world going directly at each other with a war, a trade war.
It's two heavyweights fighting it out.
Exactly.
All right, so let's talk a little bit about, you've got some picks on your list, some things you like, some things you don't like. Novo Nordisk, I like that we're getting into this because we just talked about Eli Lilly, and it's, who doesn't want a magic pill?
Yeah.
Hello.
There's a couple of them.
But let's talk. So Novo Nordisk is on your list as a buy.
Yeah.
It has trailed Eli Lilly, though. So why do you like Novo Nordisk?
And we actually picked Eli Lilly as a buy about 3 weeks ago. They're 57% off of their all-time highs, but Trump has just signed an executive order directing Kennedy to not renegotiate the Medicare pricing through Congress for like 9 to 13 years. So this would give Novo another 4 years of proprietary pricing on Ozempic and Wegovy, which are obviously two of the largest, weight loss and obviously diabetic treatments. And so the reason Novo too, they've had almost 18% dividend yield. They're almost at 2.5. They're over 2.54% on dividend yield. So being so far discounted and knowing that maybe for 4 more years are going to have that market control on on the dietary restrictions is we think a long term. It's a great.
Okay, so that's an interesting one. I mean, look, they were the front runner in the market, and then Eli Lilly grabbed up some of that market share.
Yeah.
But let's talk a little bit about the next pick on your list. You've got Lam Research on your list, and this you see as a buy. It has faced some pain so far this year.
Yeah.
Where do you see it going from, and what's the timeline you see this as one to be on the buy list?
Great question. All of our calls are very short term, just for price action, because right now volatility is like anything.
The name of the game.
Yeah. Anything we tell you this week, depending on new executive order signed tomorrow, could change anything. But we do like this one because it's also like 40% off of its all-time highs, and it's got a decent growth trajectory. So if we're buying right now in the short term, there's some kind of announcement or some kind of earnings call that we think this is going to jump to the upside in the next couple of days. So we do like that one for the upside as well.
Okay. On your list where you don't like, you've got Mickey D's. So the golden arch is not so golden. McDonald's.
Yeah.
You have that as a sell.
Yeah, this is just purely based around consumers and where the consumers are. 3 months in a row, University of Michigan consumer sentiment down. People are going to opt to buy, make at home or cook the TV pizza dinner at home instead of going to McDonald's. So McDonald's is very, price sensitive, even though you would think as the discount fast fast food that they wouldn't be. They're actually extremely price sensitive. So anytime we are seeing a pullback in consumer spending, consumer discretionary, McDonald's unfortunately is going to get hit.
Okay, interesting point about McDonald's. I'll say that, look, the chart so far year to date is a little bit higher, but it has certainly faced some challenges and some bumpiness on its chart year to date. But we'll see if it, deteriorates, especially, obviously, it depends on the consumer. You want to add a final thought on that?
They have the highest price to sales in 14 years. So they're pretty expensive right now, comparatively, historically, and then the consumer sentiment. So that's why we're thinking it's a sell for short term.
Look, consumer sentiment has been very weak.
Yeah.
So far, it hasn't played out by the numbers because, by the numbers, when I say that, I mean like the retail sales.
No, you're right.
Because it seems like people are doing this kind of pull forward of demand, trying to get in front of the tariffs.
Exactly.
Yeah. So buying all the things and stockpiling all the things, but you can't exactly stockpile quarter pounders.
Yeah.
But let's talk about the last one on your list. You got Nvidia as a hold. It has certainly faced some pressure. I mean, that was part of what caused the market to take a leg down yesterday. They'll, doing that, announcing that they'll have to do that more than $5 billion write down. A lot of the tariff exposure has been impacting Nvidia, and it's really had a difficult year this year.
Yeah.
But you see, the way you see it is a hold. Tell us about this.
Yeah.
Why?
I think it's a hold because it's still value price. So right now, if it drops even just $1, if like it's trading around 101, if it was 100, we'd be buying it. So literally, if it gets to 150, we're going to sell that because we think that would be a long time before it would recover from that price. But it is a hold because basically, I don't feel sorry for any company when they're doing business, but I do feel that they had structured their H2O chips to be sold with the actual, controls that were in place before.
They did.
And then obviously now with the tariffs, it's getting impacted. So that was at 5.5. And that just goes to show you the impact that Nvidia has on the broader tech market and NASDAQ in general that we saw yesterday. And so I think people just need to understand that, again, volatility, and unless and until we get resolution with China directly, Nvidia is going to be, we don't know exactly how it's going to be impacted.
Okay. So certainly, possibly wait this one out, along with the wait and see theme.
I just think that investors would be best served to expect that until we get stability in tariff policy, there will be volatility, and likely it will be a retraction of global equity prices to the downside. Not only because of slowing demand because of tariff policy, but also because we've got global liquidity issues, Diane, with everything that's been going on. There's a lot of global liquidity issues, which is why you're seeing bond yields go up and you're starting to see the repo market be affected. And that's really why Trump is really calling on Powell to cut rates now, and he's going to the Supreme Court and saying, do I have to not be able to fire him? I mean, this is getting...
Well, they can't. I mean, he can't.
Exactly. This is getting serious. So, but that's what he's asking the Supreme Court.
Right.
Yeah.
But Powell right now is taking the posture of wait and see as well.
Absolutely.
So we'll have to leave our conversation there for time. That's Rebecca. Rebecca Walser, president of Walser Wealth Management.